Tomorrow is the big day, and in this video, I'm going to tell you my plan for the Jackson Hole Symposium and my outlook and expectations and how it could impact a few key markets. In this video, I'll be talking about indices, commodities, and currencies, and how Jackson Hole could change everything. Let's jump in. So ahead of the meeting, we do see some profit taking place in the S&P 500, the NASDAQ, the Dow Jones, stocks, and risk assets in general. We can even see it in Bitcoin, which lost some of its momentum and has had a drawdown of around 10%. So what's going on here, and why are people potentially looking a little shaky ahead of the big Jackson Hole Symposium event? The Fed's Jackson Hole Conference is something that happens every year in August, and it happens in Jackson Hole, Wyoming. And the reason this event is so big is because this has historically been a point in which Jerome Powell makes big stands. Going back to 2018, during the Jackson Hole Symposium, he focused on his data-dependent approach to policymaking and foreshadowed further gradual rate hikes. Fast forward to more recent history, transitory inflation. He did this in 2021, where he initially downplayed inflation concerns, viewing them as temporary effects of the pandemic. In 2022, he took a more strong stance against inflation, essentially reiterating aggressive rate hikes. And last year in 2024, the Fed indicated that it was nearing a point where it could begin cutting rates as inflation moved towards the 2% target. But what is critical about 2025 is that we have a challenge in front of us. Inflation, especially when we look at the producer price index, is up. It's rising. The consumer price index has mostly stayed steady under the 3% target, but it has rounded out and has made a U-turn away from that 2% target. And largely economists are attributing some of this to the changes in trade that the current administration has imposed on the tariff situation. However, to be fair, inflation has not spiked as much as people had thought it would. Just take a look at our recent forecasts for inflation. You can see these red dots on your chart here. Those are showing the expectations that analysts had about inflation. And you can see they've pretty consistently been above what actually reported in the data. So yes, we've gotten a little bit of a rise in inflation, but it's not been a dramatic one. However, it has been a rise nonetheless. So by that narrative, you might say, well, okay, then the Fed should probably just not cut rates because inflation is still remaining sticky. Let's just continue to wait until inflation goes down and then we can cut rates, right? Well, if it were that easy, it would be great. But there is another component that gets thrown into this, which is the labor market and the overall state of the economy. We have seen a slight rise here recently in unemployment claims. Job openings in the United States continue to trend lower, and the NFP reports have been showing signs of slowing over time. So there is also a threat to the labor market that is becoming slowly, not urgently or critically, but slowly more apparent. So the Fed is now in a situation where they have inflation on one side that is still kind of sticky, but they're seeing evidence that the jobs data is coming in soft. So if the jobs data is looking like it is showing signs of cooling, not crashing, but cooling, there is a distinction there. It's really important that we make that. The jobs market is not crashing. If it was crashing, we'd have a very different conversation right now. It's showing signs of cooling at the same time that inflation is showing signs of slightly rising, not dramatically, just gradually. This is important that we understand this before we continue with this discussion, because jobs data is softening, inflation is slightly rising. It's not dramatic in either direction. So what does Powell and Fed team do? It's not an easy answer because, again, you have two things that, on this front, you'd say, oh, in this case, we want to cut the interest rates to help the jobs market. But in inflation, you want to say, no, we need to keep interest rates steady to keep inflation from going crazy. What happens if you cut rates and then inflation jumps, but at the same time, if you cut rates and that helps the jobs, right, we still have a problem here. So given all of that, what do I think Powell is actually going to do? Drum roll, please. I think Powell is going to signal a hawkish cut. And what I mean by that is I do think that Powell is going to suggest, okay, we can cut rates a little bit. We have interest rates pretty high relative to last 10-year history, maybe not against long-term history, but relative to inflation, interest rates are high, right? If inflation is around 2.7% according to CPI and the interest rate is around 4.5%, we have a little bit of room to normalize that. I don't think we should be cutting rates dramatically, but I do think we can cut a little bit to keep the jobs market from going worse. And we can also, kind of watch inflation from there to see if we can do further cuts. So this is my prediction for the Jackson Hole Symposium. I think Powell's stance, and I could be wrong, but this is my stance. I think my best educated guess based on the data that we just got done discussing is that we'll get a hawkish cut from Powell. Now I showed you a ton of macro data here today, but I also want to show you a really cool tool within the EdgeFinder that makes this whole process I just did way simpler. We can pull up the US economic heat map, which gives us a bird's eye view of a ton of key metrics that the Federal Reserve uses to determine whether they should cut, hold, or hike interest rates. Today's video is sponsored by Moomoo, and if you haven't heard of Moomoo before, they're a one-stop global trading platform with over 26 million users across the US, Australia, Singapore, Canada, Malaysia, and Japan. And Moomoo offers $0 commissions on stocks, ETFs, and options trades. They also offer free level 2 data and real-time options chain data, no extra charge. And the Moomoo platform is super advanced. They offer a really powerful options trading tool, and you can even track latest public figures holdings like Nancy Pelosi's directly within their portal. And if you want to learn something about a particular stock, just ask Moomoo's AI feature. With this tool, you can ask for trading insights on your favorite stocks. And if you want to tap into what institutions are buying and selling, check out their institutional tracker. This tool allows you to explore top institutional holdings. What sets Moomoo apart is their incredible platform for researching stocks, checking out all sorts of different analyst rating tools, and insider holdings and trades. And for a limited time, as shown on the dates on the screen right now, you can get up to $1,000 in NVIDIA shares, plus 8.1% APY for US users. As you can see on the screen, please follow the criteria here and make sure to use the link in the description to get the full context behind this offer while it is available. It is available for only a limited time. And are you already trading with another brokerage, but all these tools sound pretty cool? Well, I think so too. And they're currently offering a really cool 3% match on the first $1 up to $20,000 transferred from another brokerage. So if you're looking to take your trading tools to the next level, check out Moomoo and take advantage of some of the offers available using the link and details in the description of this video down below. Now back to the video. And as of yesterday, we launched a free version of the EdgeFinder. Now, full disclaimer, it is delayed a bit and it has some limited features, but you can still scan a ton of market data completely free with a copy of the EdgeFinder free version, which is now available in the description down below. The first link in the description will allow you to fill out a quick form that will send to your email a copy of the EdgeFinder free demo version for you to start exploring and checking out the full list of features that we build to help traders scan fundamental markets in a more comprehensive way. Check it out. First link in the description down below. Speaking of top setups currently, we do still have a bullish rating on gold. I really like this setup, except I don't like the technicals at this time. So I'm waiting for breakouts, I'm waiting for pullbacks, something on gold to get me in, but I really like the economic data backdrop. With sticky inflation and softening labor stats, I really like the bull case for gold. Same thing with silver. I actually really like the technicals on the chart even more for silver. So let's jump into some metals. So first and foremost, I've been on my high horse about this for weeks now. Gold is just untradeable for me right now. It's so choppy. The daily chart is so lacking directional bias. So I am looking for, without spending too much time on this, one of two scenarios: a pullback into support around the 3270 level, or a breakout and retest of the previous highs around 3425. Both of these trades look very good to me as long as the EdgeFinder's bias remains the same. On silver, however, it looks like we may have found a higher low here, but it's kind of too early to say. I'm looking for a breakout through these highs and a pullback into this area of support, or a pullback into this area of support around 3650. But silver's chart actually looks a little bit cleaner. When we zoom out here, you can see the daily chart is actually trending with some direction. Just take a look at the gold to silver ratio. You can actually see silver has been beating gold up recently and actually moving lower. This is the gold to silver ratio. It's comparing gold versus silver, and you can see a nice downtrend here. This shows me that silver is moving with more momentum than gold is, at least for now. US oil is also getting a really bearish reading, which makes sense considering we've had some really lackluster economic data, which could stunt the demand for US oil. And so I'm looking for pullbacks into this this area here of resistance for possible short setups. And check out the dollar yen, which is getting a bearish reading here within the EdgeFinder. I may actually be looking for a possible short setup on this, but very cautiously, as it is a very expensive currency pair to hold on the short side due to the very low interest offered by the Bank of Japan. By taking a short position, you end up borrowing from the US, which offers 4.5%. So you pay the 4.5% to buy the Japanese yen, which offers about, I think it's 0.5% interest. So you get a very negative swap. That is why holding the short side of dollar yen is a very costly trade, and you need to be right in direction quickly to make it worthwhile. So I typically stay away from shorting yen pairs simply because of the high holding cost as a swing trader. Instead, I've recently mentioned my interest in staying long the VIX. I actually bought a VIX call vertical spread. So check this out. So if you're not an options person, I'll just explain this really simply. I think the VIX has room to expand higher, especially with the Jackson Hole Symposium. I think there's a possibility that you get something that shocks the market. It's certainly not a guarantee that that happens, but if you do get a shocker event, there's a possibility that the VIX jolts higher here. And if that does take place, this trade would pay out really nicely. You can see overall on the net position, I'm up 80 bucks. Essentially, without getting too complicated, I bought a call at the $15 strike price and sold a $30 strike price call to collect some income to offset some of the expense of the trade. Essentially, I am bullish on the VIX, and if it moves higher between now and the expiration date around the 19th of November by a good margin, I could make a really nice return on this trade. In fact, my risk to reward is about a 2-to-1 on the options contract that I bought. So if we get a surge higher, I could make a nice profit on the trade. And if we don't, I'll lose about $2,200 in premium that I paid for this vertical call spread. And when we look at the VIX, you can see we've been settled around here at the 14.6 for a little while. I ended up buying the calls right around this candle here, somewhere in the middle of the day. And so we've moved a little higher. There's been a little bit of gains on the VIX, but really what I'm looking for is truly a spike in the VIX. I think there is a possibility that volatility has dried up and may shoot higher here. And if we navigate to the EdgeFinder's seasonality tab, click on monthly seasonality, we can then go to the VIX here. And what we can see is historically during the upcoming months of August, September, and October, there is historically a strong rise in the volatility index. So we've had some really quiet months during the summer. I do think there's a possibility that we get a spike in volatility in coming weeks and months. And so I'm positioned for that possible upside. Like I said, if we don't get the spike in volatility, I will just take a loss on this trade. The dollar index continues to chop sideways here. It really has not made any sort of substantial move in a while, as most things have not. Most things have been really quiet. Hence why, again, the VIX has been so low. I do think that, like I mentioned, I think volatility could expand, and that could mean many markets, including the dollar, currencies, indices, etc., could make bigger moves here. Perhaps the Jackson Hole Symposium will be a catalyst for that, and we will have to wait and see. My opinion on the dollar is just very mixed, based on what we discussed so far in this video. And when we go back to the economic heat map, like I said earlier, the US dollar is sort of sitting in middle ground between getting a bullish and bearish reading. You have inflation that's kind of hot, and you also have jobs data and growth metrics that look soft. That leaves me with a mixed or neutral view on the dollar. And if you enjoy my videos, I just wanted to make a note that we hit 500,000 subscribers on this channel, and I am incredibly grateful for everyone who watches and supports my content. In fact, we actually hit 500,000 subscribers on the live stream today, and we caught it on camera. So check this out. And again, thank you very much for your support. And I do hope that my channel is helping you in some way, shape, or form along your trading journey as I share a component of mine with you. Thanks for watching, and check this out.
Oh my gosh, you guys are not going to believe this. Look at this. Look at this. Can you see this? See that? Someone hit the sub button and you'll take us to 500K. Wow, that's surreal, guys. Thank you very much for the support. I just screenshotted that. We are sitting at 499,999 subscribers, and someone just did it. You guys, thank you. Whoever just did that. I screenshotted that. Wow. Dude. Oh, man. Oh, man. That is a blessing, and I'm thankful every day to be here with you guys doing this. That is so cool. 500K subs. Just hit that on the YouTube channel. Wow. Wow. Thank you so much for the support on YouTube.
if I in any way can help people in their trading journey, honestly, it gives me a lot of joy in my life to be able to do this, to share this passion for markets with other people. I genuinely love trading. I love learning about markets. I love sharing that learning with other people. There's always more to learn. And the fact that I've had 500,000 people join me on this journey to improve in markets and to be realistic and no BS and, share my experience as I go through what has been both one of the hardest things and also most rewarding things in my life. So wow, thank you guys. 500K subs. That is really, really cool. And I am humbled and grateful every day to be able to do this. Very cool. That's a good day. It's a good day. I'm the 500,000th subscriber. Samuel, thank you. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.